Hello, and welcome to Explain the Charts, your channel for detailed technical analysis and market insights. Today is November 24th, 2025, and we are taking a deep dive into one of the market's biggest movers, Alphabet, ticker Google. The stock has been on an absolute tear, recently breaking the significant $300 psychological barrier for the first time ever. This powerful move is backed by a flurry of incredibly bullish news. First, Google launched its next-generation AI model, Gemini 3, which has been met with widespread optimism from investors and analysts. This has helped to silence the narrative that Google was falling behind in the AI race. On top of that, it was recently disclosed that Warren Buffett's Berkshire Hathaway has taken a massive $4.3 billion stake in the company, a huge vote of confidence from one of the world's most legendary investors. Other positive headlines include a major cloud deal with NATO and a stellar Q3 2025 earnings report, with revenue surging past $100 billion. However, it's not all clear skies. The company is still facing a major antitrust challenge from the U.S. government, and with shares trading at high multiples, some are concerned about its valuation. So, let's turn to the charts to see how this news is shaping the price action and what we can expect going forward. Starting here on the daily chart, we can see a very strong and established uptrend that began back in April 2025, when the stock was trading around the $140 level. The price has more than doubled since that low, which is a testament to the powerful momentum behind it. We can see a period of consolidation and a slight pullback in late September and October. But the real story begins around mid-November. Notice the explosive move upwards that started right around November 17th. This directly correlates with the timing of the Berkshire Hathaway investment disclosure and the Gemini 3 launch announcements. Look at the massive increase in volume on these breakout candles from November 19th through the 21st. This high volume confirms strong institutional buying pressure and validates the significance of this breakout. The price surged to a new all-time high of $306.42 on November 20th. This level is now our most important overhead resistance to watch. After hitting this peak, we saw a sharp intraday reversal on November 20th, forming a candle with a long upper wick. This pattern, often called a shooting star, can indicate profit-taking and potential exhaustion at new highs. However, the bulls stepped right back in on November 21st, pushing the price back up to close strongly near the $300 mark, negating some of that immediate bearish pressure. A key area of interest is the large bullish gap created on November 19th, from about $287 to $292. In technical analysis, gaps like this often become future support zones. Furthermore, the previous resistance zone between $290 and $295 should now be considered the first major support level on any potential pullback. Let's zoom in on the daily chart to get a clearer view of this recent, incredible price action. We're now looking at the candles from late October onwards. You can see the sharp drop following Q3 earnings on October 30th, which was quickly bought up. The price then consolidated for about 2 weeks in a range between roughly $275 and $290. The breakout from this consolidation was explosive, driven by the fundamental news we discussed. The V-shaped recovery and subsequent surge show an immense change in market sentiment. That shooting star candle on November 20th is very prominent here, showing a battle between buyers and sellers at the all-time high. The fact that the price failed to break down and instead recovered the next day is a sign of underlying strength. The market is currently trying to establish a new base above the $290 to $295 support area. Now, let's switch over to the 1-hour chart to analyze the short-term structure. Here we can see the anatomy of the recent breakout and reversal in greater detail. The push to the $306.42 high was swift and aggressive on November 19th and early on the 20th. Then came the sharp reversal, a nearly 6% drop from the high back down to the $288 level within just a few hours on November 20th. This demonstrates significant volatility and the presence of profit-takers. Crucially, buyers stepped in aggressively around the $290 level. This area, which was previous resistance, held perfectly as new support, a classic technical confirmation of a successful breakout. The subsequent price action on November 21st shows a steady grind back upwards. The stock is now consolidating in a tight range, coiling for its next move around the critical $300 level. For an even closer look, let's drill down to the 15-minute chart, focusing on the last few trading sessions since November 19th. This intraday view clearly shows the spike to the all-time high, followed by the aggressive sell-off on November 20th. We can see the bottoming process as the price hammered out a base near $290. The trend on November 21st was one of consistent higher lows, indicating buyers were in control, absorbing any selling pressure on the way back up to $300. Intraday, immediate support appears to be forming around the $294 to $295 area, with resistance right at the $300 mark. Breaking above this level on an intraday basis will be the first step for another test of the highs. All right, let's pull back to the daily chart to recap and discuss what to look for next. To summarize, the key price levels are clear. Our primary resistance is the all-time high at $306.42. The psychological level of $300 is the current battleground. Our first major support zone is between $290 and $295, the old resistance level. Below that, the top of the gap at around $287 is the next critical support to watch. So, what are the likely scenarios? The bullish case, which I'd give a 70% probability in the short term, is that Google will either consolidate above $300 or briefly dip to test the $290 to $295 support before making another attempt at the all-time highs. The powerful news catalysts and immense volume suggest the path of least resistance is higher. A sustained break above $306.42 could open the door to analyst targets in the $335 range. This outlook would be reinforced by continued positive market sentiment and strong adoption news for Gemini 3. The bearish case, with a 30% probability, hinges on the idea of a buy the rumor, sell the news event. If the stock fails to hold the $300 level, we could see a pullback to test the $290 support. A break below that would likely lead to a gap fill scenario, taking the price down towards $287. This scenario becomes more likely if we see negative developments in the antitrust case or a broader market downturn. A definitive trend change would only be signaled by a break below the recent consolidation lows, somewhere around $280. Things to watch for will be trading volume on moves up versus moves down, how the price behaves around that critical $300 mark, and, of course, any new market-moving headlines. That's our in-depth look at Google. We hope this analysis helps you better understand the current market dynamics. Please remember, this video is for educational and informational purposes only and is not financial advice. Trading and investing involve risk, and you should always conduct your own research and due diligence before making any financial decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.